Lawmakers failed to reach a deal to shore up the home insurance industry here in California recently. In an interview with Politico, the governor said by the end of the legislative session on Thursday, the discussion fell flat, mainly due to a clash between industry and consumer advocates. People across the state have increasingly expressed frustration over insurance companies, including State Farm, Allstate, and Farmers, announcing pullbacks this spring. Many companies are still operating in the state, but they're raising their rates significantly to account for the increased risk of natural disaster, including wildfire. Joining us now for more insight and hopefully some help, we welcome Harvey Rosenfield from the advocacy group Consumer Watchdog. Thanks for being with us, Harvey.
A pleasure. Good morning.
Of course. Why do you think lawmakers failed to reach a deal?
I think they did the right thing by not capitulating to the insurance industry. The industry wanted consumers in California to pay far higher prices than they have to pay now, prices that were unjustified. The insurance industry wanted a bailout from their responsibilities to pay claims. And the lawmakers knew that if they passed the industry deal, which, by the way, nobody had seen because it was kept secret in the last moments of the legislative session, that rates would skyrocket and their constituents would be angry.
So what's the follow-up? What happens next?
Well, I think the problem is this. You've got insurance companies in California who for 35 years have had to operate under a set of rules put in place by the voters that restrict rates to fair levels. They're allowed to charge whatever they need to cover losses, cover claims, and earn a reasonable profit. The companies have never liked that law. That's known as Prop 103. And so under Prop 103, the voters gave the insurance commissioner, who happens to be a guy named Ricardo Lara, the power to determine what happens with rates, how rates are set. And it could very well be that in the next few weeks, Commissioner Lara will step in and bail out the insurance industry in a way that the lawmakers refused to, sensibly, because they didn't want to contribute to basically paying the ransom for the shortages that the insurance companies have created in California in order to push for deregulation.
So that bailout would come from taxpayer money. Speaking of Ricardo Lara, the insurance commissioner said, we will not wait for what's happening in Florida to happen here in California. I just read what's happening in Florida. They're, paying on average 3 times the national average for insurance if they can find it. Is that California's future?
California's future will not be that if the elected officials in this state honor what the voters have ordered. Florida is the example of what we'll have excuse me, in California. If insurance companies get their way, they get the bailout, they get deregulation, and then we'll have the skyrocketing rates that we have in Florida. So the goal is to make sure that our elected officials do not capitulate to the insurance industry and do not agree to concessions that would basically free insurance companies to engage in price gouging.
So how does that happen? How do we ensure that?
Well, we just have to hope that Ricardo Lara and the governor and the legislature hew to what the requirements of the law are and make sure that insurance companies do not overcharge us. There's a process in place. It allows public scrutiny of rate increases before they take effect. That's served us well in California. It's held rates down below the national average, and still the insurance companies have made a profit. They're just taking advantage of what they call the climate crisis in order to orchestrate shortages that will then justify elected officials bailing out the industry.
But you can't deny that we have seen disastrous wildfires, even if we only look here in the Bay Area.
Absolutely. But if we look at the last 25 years, insurance companies' profits in California for homeowners insurance have been 4 times the national average. They took in $150 billion in the last 25 years in homeowners premiums. That's what we paid them. They only paid out about $70 billion in claims. They're not hurting. Yes, we've had a couple of bad years here. Yes, climate change poses new risks that we have to figure out. But the system is set up under Proposition 103 to make sure that insurance companies get the rates they need, but not a penny more. And they want more. They want more than they need. And that's the battle that we have. It's a showdown between elected officials and the insurance industry.
Let's talk about the effect this is having on homeowners, and I'll speak personally. Every time I get a letter in the mail from State Farm, no matter what's in the envelope, my heartbeat jumps a little bit. Is this what you're hearing from others?
Happening to me, happening to everybody. And it's, by the way, putting a lie to the industry's argument that this is all about climate change. We're now seeing the same kind of thing happen with auto insurance. The companies are pulling out of neighborhoods, making it harder to buy auto insurance. This is all part of a strategy that the insurance industry uses to destabilize the market. It's extracting enormous pain from California consumers. And it's all designed to increase their profits at the expense of the economy.
All right. We'll have to leave it here. Harvey Rosenfield from Consumer Watchdog. I appreciate your time and expertise this morning.
Pleasure. Thank you.